Equity markets made a big move lower after extending weekly highs to the highs we've seen since early March. It looked like the stock market was on a tear, putting out big number in the month of April, and then lo and behold, come May 1st, things turn around very aggressively. Obviously, a lot of forward guidance from earnings. Certainly, the picture that the stock market had painted was that a lot of hope and optimism being pumped into the market. Maybe some of that got a little bit stale. It seems to me at this point that when you get negative news from Amazons and Apples and Exxons, things start to maybe turn a little bit south, and we saw that on Friday today. So we did hold above the critical 2,800 level. So we're going to go out roughly unchanged after a big move earlier in the week. But at this point, that 2,800 looks like to be a very precarious level. If we continue to hold that, that will be very significant. If we trade sideways for a while, then we have something to build on. Be interesting to see what happens next week when we come back. Will that 2,800 level continue to hold? Volatility-wise in the equities, we saw the VIX index dip all the way down close to 30, but it's going to end the week closer to 40 after this big sell-off and concern about forward guidance from equity and revenue streams from equity earnings that we're getting. That's going to be significant. Likewise, the GDP number this week wasn't great. It could have been a lot worse, but next quarters is already expected to be really bad. I think at this point, stocks are going to have to start gauging what they're looking at as far as what is going to be the gauge that's going to continue to what they're going to interpret how this all ends when the dust settles. And lastly, I think at this point, we've got earnings next week, continued earnings. We have the jobs numbers next week, the unemployment, the non-farm payroll number that comes out. And then we have to get a little bit of reality into this. As these lockdowns start to unwind, what does it really look like? How quickly are we getting people back to work? And what are the types of businesses that are going to start to make money or make money back that they've lost? So those are all significant things to watch next week. I think at this point, the jobs number will be the highlight. But again, the claims numbers have been a little more important. Those are more in the moment. Friday's non-farm payroll will be a looking back number. And I think we can all agree that that number is not going to look very positive, at least to what we've seen over the last several years. So heading into the weekend, stock markets off their recent highs, but holding at that critical 2,800 in the E-mini S&Ps. It'll be interesting to see where we open up next week and how new data and new information is absorbed.